All right, welcome back everyone to another weekly edition of Market Mutterings for the week ending on February 4th, where I'm going to do my best to give you some market insights and some quality trade setups to help you make money for the week. I hope you enjoy what we've been doing. As always, if you need help with your trading, you're trying to get to that next level, visit thelinkedinlist.com and take a trial to our live trade room. Now, usually when you see these, before I get started, you see my little grizzled mug down in the left-hand corner. I'm going to spare you that this week, and that's going to be great for some of you. But the reason I'm doing that is I had LASIK eye surgery over the weekend. And although I can see incredibly well right now, better than I have in half a decade, it's amazing the difference. My eyes are a little swollen, so I'm going to spare my image here this time around and next week. It's either that or sunglasses. So next week I'll have my face back up there. Now let's talk about stocks. Let's start out as we always do here with the market. And one of the themes I've been talking about over the last week, if you've listened to these, was like, this thing won't go down no matter what you throw at this market. It just continues to defy all logic, just keeps going up. Every single day was just clicking up, uptick, uptick. I mean, virtually no downticks whatsoever in this market. This week, the whole thing changed. It was like, the damn thing wouldn't stop going up the last couple of months. Now the damn thing wouldn't stop going down this week. I mean, every single day was like a downtick, new low being made. Just couldn't get out of its own way. Now, we certainly expected that there would be a sell-off. Like, this wasn't going to last forever. So the thing is, where do we go now? Like, what is the next step? Where could you see this market stop going down? Where would it sell to? Where may it bounce? If you're holding long positions or you're looking for that bounce, I'm going to give you a couple of strategies here. The first thing I want to talk about is that it has been the longest period in history that the market has gone without a 5% pullback. So I think we're somewhere, don't quote me to the exact day, but I think it's somewhere plus 400 days that the SPY itself, the S&P 500, has not had a 5% pullback. So what I've put up here on the chart is just about this 270-230. It's about a 5% retracement from the highs that we had on the 26th. So if you look at that, that's going to be close to where the 50 moving average is here on a daily chart. I think if we continue to see more selling here in the market, especially early on to begin the week, that's probably where you would get the most effective bounce. Now, you might get bounces in between there, but I think, as we talked with some of my tweets this week, I think we have to trade down into that area. That's where the value is going to be in a lot of these positions. Now, what would be a really great thing, I think, especially if you're a day trader and you're looking to really capitalize on some quick gains, I think the very best plan A scenario for Monday would have this market gap down, trade down into that level, taking a lot of those big Momo stocks, big beta stocks, drag them all right down into some of these levels. I think you'd have some great trade opportunities, probably some of the best trading opportunities we've seen since election night. So I'd be really looking forward to that going into tomorrow morning. This is also an important level because that's back to where the SPY was trading between the 8th and the 10th here before it had this last long stretch breakout. So kind of look for a landing zone. It doesn't have to be perfectly 5%. I don't think anybody's looking for that, but I think if you start to see selling down early, first thing in the Monday morning, if that's the move that it makes, or overnight futures indicate you get a big gap down, I'd really be interested. At least one thing will be proved. You'll get to see the level of interest of the participants down here. Will they try to defend it down here? How much volume will come in there? What kind of defense will come down? That'll tell us a lot of the story, because if it's unable to hold that level, this is a very important level that goes back to a time frame. This is an important 5% correction in the market, which it hasn't had in 400 days. So it's got to hold that. I think if it doesn't hold that and it continues to sell, you don't have anything that's going to stop you from actually going red for the year, which would be 266, 63 areas, and we'll have to look for other levels. So last week, the week before, I was saying the best trade that we had was buying the dips on the E-minis and the YMs. We tried that one time this week, and it just didn't have the same kind of feel and tempo, so that went out the window. So what I'm looking for here is some solid flush. That would be plan A for me as a trader. Flush me out first thing Monday, and then let's do some business. If we bounce, that kind of takes away that plan, because I would have to see whether or not that bounce was going to stick. Are we going to V-shape rally like we have in the past and try to attack all-time highs again over the next couple of days? Is it going to be a quick bounce and then a fade? That's all going to have to play out. I can't predict that. I'll just have to see. But I would like first move to be a big flush, as you know. If that's not it, then if it does bounce or gaps up, I'll have to see whether or not the gap upholds. Now, individual stocks, there are only a couple I have right now. That may change, of course. Definitely will change during the course of the week, but there's a couple I'm looking at. Let's say we continue to get this flush. This is based on just downward momentum early on. I think this Netflix would be great if it would just drive itself down into this 250 area to 251, which was about the support here from the 24th and 25th after its gap up from earnings. The thing I'm thinking about with Netflix, it might not happen because during this whole market sell-off all week long, especially it was just down trending all day Friday. It couldn't catch a break. This thing just held up relatively well. I mean, it's still hanging in up here. I mean, it didn't lose the 10 moving average yet on the daily chart. So that could be translated as being very, very bullish for this stock because in a bad market, it managed to cling on to most of its gains. However, I would like, if the opportunity should so present itself, that it would get down into that level of 251.80s, 250s. I'd be a buyer down there, if nothing else, just for a quick bounce trade. I mean, most of these ideas I'm passing by you. This is just bounce trading because I'd need to see more out of the overall market before I could just say these are swing longs. I mean, that's just momentum swing long. If you're like a long-term investor, I don't think it makes that much of a difference at this point. But let's look at these 250. If we're fortunate enough to get down there, maybe I shouldn't say fortunate, careful what you wish for, right? I'd be interested in taking a trade here on this Netflix. Now, to the flip side of that, there is a short that I'm interested in. That's on this Shutterfly, this SFLY. I don't know where in the hell this thing thinks it's going. It's just maddening. The move on this thing after earnings. It's going from 51 bucks, well actually 52 bucks up here to 74. I mean, the same thing, down market every day here, especially the last 2 days of the week. And this thing just it was breaking out while the market was going down on Friday. This thing was, and it ends up closing up here on highs. Now, what I would like to see from this is some sort of early morning vertical move out of the stock. That's what I'd like to see. But when you start to get to day 3 of these big run-ups, it's unlikely you get a morning vert or a big gap up. It's like they tend to get melty after that. So for new people that are listening to the video, melty just means it stops getting vertical, stops speeding up to the upside, and just kind of slowly trickles like it does right here. But if we can get that thing, I think still if you get around 76, if it somehow can just pop to 76, I'd like to put a short in on here. This is a big overbought stock on just about every indicator available. I know that's not a guarantee that the thing is going to pull back, but I think after 3 days and about almost damn near 100% move in this stock, it's got to be at least worth some point picking a pivot level and taking a shot short at something like this for at least one nice washout green day gap fill or something like that. At this level, it's kind of a little bit hard to predict, but I think if it does go vert, it would make the decision a little bit easier on my part. But I'd look for about 76 if it could get there early within the first hour or two. Monday, that's where I'd like to be. Maybe using about a $1 stop, trying for a $2 to $3 gain, like this one here. At least some point this week, attempting a short on this one. Now, another one here could be OLED. Maybe worth a look. This thing has just been, it's been beaten up real bad. And this thing was going down before the market. We talked about this one last week. It was going down before the market started selling off. Market selling off didn't do it any favors. So you got this thing going from 206. That's like $50 on this beast. And I know it's gone up a lot. And I know a lot of these stocks have well deserved to get some air taken out of them. So trust me, in the long term, you'll learn to embrace these pullbacks because that's what's needed for a really, really healthy market. But nonetheless, this thing's down about 50 bucks. Now, over the last 2 days, it's putting in just a little bit. You can see these wicks down here at the bottom chart, on the very bottom chart here. This is a daily chart. It's got a couple of wicks down here around this 152.44 spot. So that's a pretty good area there, like a little double bottom you got to work with to help you manage risk. I think if there's two scenarios you have here. One, it trades back down into that level, making it a triple bottom and holding with some good volume would solidify that low. And then I think that would be a good long with a really tight stop there. You know, it's also going back into these areas back in the earnings way back in November. Excuse me. That's a good little spot right there for a break. Now, if we kind of look a little bit closer on the chart right here. I'm trying to open it up. There we go. If it can get back above the Friday's high, which is just 160, just 160 here, almost 161, 160 half and 161. I think if it can trade back up here, it at least should work its way back up to the post-market, pre-market highs from Thursday. It should at least give you some cash from here to there, if nonetheless. If it's just a short-term rally or short-term pop, you should at least get that. If it can hold this level, it should make it back up into this 169. So I'm not saying this thing's going to go back to $200, but it's in the process of leveling off and creating a base. It's kind of like it did back here, where it kind of washed out a little bit, created a base for a couple days, and spiked, just like it did back here late in the year, creating a base and then making a big run up. So you've got a base here forming. Maybe it needs 1 day, 2 days, 3 days, I don't know. But pay attention to that level. Now, if that level gets taken out, this is not really a trade for me. I mean, because there's some other areas down here a little bit further where this thing could roll over, maybe back down to the 100 moving average, or where this whole thing started back in October, back to 140. That's not out of the question. If the market wants to sell down a couple more percentage points, that's where you may end up going. But right now you've got a little bit of a base working here. I think this thing could provide some decent opportunities. So as we look here forward, the first thing that we really want to pay attention to, see what the overnight futures have to say, see what the morning looks like, see if that SPY makes it back down into these levels. If you're looking at E-minis, that's 27.48 area. See if you're getting down into this, down into these 50 moving average on the daily chart. See if it just gets selling down. I think if you get some selling down into that area, you'll be able to see what the interest is down there. And I think that's a good spot for any kind of bounces. Everything else after that, if the move starts very strong, gap up, immediate attack for a rally, then I would take a look at possibly shorting some of the gaps up on things like, say, OLED ripped up $5 as soon as you woke up. Well, that'd be a different story. I may be looking at shorting something like that. So these plans change instantly. That's one of the great things about being a day trader. So we'll see what it does. I would love to see that flush move. I think that's already been discussed. I think that would be the best opportunity. And then the flip side of that, if we spike, we're going to have to look and see whether some of these hold. So if you guys need some help with your trading, visit the lincolnlist.com. Promise next week I'll grace you with my mug once my swelling goes down from my eyes. But hey, it's great. It's awesome to be able to see again, see clearly like this. It's amazing. So anyway, guys, have a great week of trading. If you need my help, you know where I'm at. Until the next one, take care.